Hello, everyone, and welcome to today's webinar hosted by the Oregon Office of Rural Health. My name is Rhonda Ann Gerst, and I'm the RHC Program Manager. The webinar you are attending today is titled Basic RHC Cost Reporting, presented by Katie Jo Rabel from Whitley. Katie Jo Rabel has more than 19 years of experience in audit and accounting services, focused exclusively on healthcare industry clients. She specializes in assisting freestanding and provider-based clinics to navigate through the rural health clinic certification process and is a proven thought leader with vast experience in the RHC arena. Katie Jo helps to calculate RHC's Medicare and Medicaid rates, provides education regarding changes in billing because of certification, and consults on all areas specific to RHCs. In addition, she helps organizations determine the best certification options to experience the most beneficial gain from Medicare and Medicaid reimbursement. Katie Jo is a regular speaker at industry events and conferences, such as the Rural Health Clinic Association of Washington, the Oregon Rural Health Conference, and the National Association of Rural Health Clinics Conference, just to name a few. Before we begin, I have a few housekeeping details. This webinar will be recorded. Eric Jordan will post the slides and recording on the Office of Rural Health website within the next few days. A big thank you to Eric, who is the tech support during this workshop. If you encounter technology problems, enter your questions into the chat box and he will assist you. You are all currently muted and your video is off. Katie Jo will be happy to answer your questions at any time during the presentation. Enter your questions in the chat box and I will read your questions from the chat box. I have put a link to a survey in the chat box. Please complete the short survey at the end of the presentation so the Office of Rural Health can continue to provide the resources most helpful to your RHC. Without further ado, please welcome Katie Jo Rabel.
All right, thanks. Well, thanks for having me. I'm excited to be here and wish we were here in person, but we're being flexible and nimble at times, and it's great to be able to do this. So we have a lot to get to, a short amount of time. I'm excited to be talking about Medicare cost reporting with you. This is my world, and it's part of your world. You know, a part of the year, and I'm sure that many of you gather information for your cost report preparer. And this is a great, a great way to have an understanding as far as the information that goes into the cost report, how it affects your rates and payments, etc. This is kind of our basic overall. I'm going to be expanding on this, I think, next week regarding advanced Medicare cost reporting. I didn't want to keep it too basic, so we have some really great information in here as well. Like Rhonda Ann said, I'll take questions as we have them. I love questions, immediately. Don't feel like we have to wait. And I believe these slides will be posted as well. So today's agenda, we'll be giving a brief overview of just Medicare cost reports. What's our end game for cost reports? And then we're going to be diving in further into what are allowable costs. When we talk about allowable costs on the Medicare cost report, what constitutes an allowable cost? What's a non-rural health clinic cost? We'll talk about visits and provider productivity and how that affects your Medicare cost per visit. Provider staffing, flu and pneumonia reimbursement, because that's part of the Medicare cost report. Another component of your settlement is Medicare Bad Debt. And then we'll talk about some helpful hints. And of course, during this time, we have COVID-19 considerations that we have to think about for this year's cost report. All right, so I'm sorry, I have two screens going on here. Let's talk about cost report and overview. What's the whole point? Why do we have to do a cost report every year? Well, regardless of whether you're a freestanding rural health clinic or a provider-based rural health clinic, you get paid an interim rate during the year. So let's say your interim rate during the year is $100, and at the end of the year, your actual cost per visit is more than that. If you were a provider-based rural health clinic to a hospital with less than 50 beds that doesn't have a cap, then Medicare is going to owe you the difference between that $80 interim rate, let's say, and $100 actual cost per visit for the year. So it's a reconciliation. What did you get paid during the year? What should you have gotten paid? And Medicare is going to either owe you some or you're going to owe Medicare as well. It just depends on how things shake out with your interim rates. We also have a couple other components of the cost report that we'll talk about that also go into your costs per visit and your settlement amount. We'll talk about that. Really, I like to refer to it as kind of like a tax return for your clinic. If you're an independent rural health clinic, you're going to have your own separate rural health clinic cost report. If you're a provider-based rural health clinic, your rural health clinic is going to be a component of your hospital's Medicare cost report. So again, think of it like a tax return. Again, we have two different types of rural health clinics. And when you're talking to rural health clinics, it's really important that you find out what type of rural health clinic you're talking with. Are you an independent, or sometimes we call freestanding rural health clinic? And you can be a freestanding rural health clinic that's still owned by a hospital, but you're not provider-based to that hospital. And we won't go and get into provider-based regulations right now, but there's big differences. And again, independent and freestanding, they have a separate cost report. Unlike provider-based RHCs, they submit a cost report that's part of the hospital's cost report. It's just a separate section. And the worksheets are the same. They're just different schedules. The cost report is due 5 months after the close of the year end. Of course, we have extensions now due to COVID. Typically, they're never extended. So only during pandemics or when a mail truck catches on fire, and that's a real thing that I've experienced, are you able to, get an extension for a cost report. We have to file electronically. Again, they're due 150 days after the year end, or after a change of ownership, or let's say we have a freestanding RHC that goes to a provider-based, we would close out that provider number, and a cost report would be due 5 months after that change. And again, extension to file typically never happens, but we have that in place during the public health emergency. What happens if you don't file within that 150 days is your payments get cut off. So, if you have a receivable, you'll be waiting for that money. And typically what happens is it's a little bit difficult to get the payments turned on once they're turned off. And that is, dependent on intermediary as well. So let's say some of you have Palmetto as freestanding RHCs, some older freestanding RHCs. It seems like Palmetto is a little bit harder to get payments turned back on, whereas Noridian might be a little bit easier. But that's really what we're looking at when we have a cost report that's not filed on time. Cost report components. So items that your cost report preparer will be asking for the cost report. Of course, we have trial balance of expenses that we input into the cost report. There's a worksheet A and an M1, and we'll go over the exact components of the cost report a little bit later in those worksheets and where this information goes. But basically, we start out with expenses, and that's really the first component of the cost report. Keep in mind that our overall goal, I guess, of the cost report is to arrive at the settlement, and the settlement hinges off your Medicare cost per visit. Well, cost starts with expenses, right? So that's where we're trying to get to. What are our expenses, and what do we need to do in order to get to allowable expenses? So we may have reclassifications of expenses to different departments, maybe to the hospital departments. We may have adjustments that we have to remove expenses or add expenses. So that's kind of our denominator, or sorry, our numerator of the calculation. We're trying to get to an expense number in our numerator, and in our denominator, we're coming up with visits. So cost per visit, we have visits, and that really hinges off our provider statistics, our visits and our FTEs, and we'll go over the visit calculation. Separate from that, separate from the cost per visit calculation that we're trying to get to as our end game, we also have flu and pneumonia vaccination costs that we claim because we get paid for direct Medicare flu and pneumonia vaccines through our Medicare cost report. Again, we have these visits that we compare to provider like FTEs. Talk about that a little bit later. And we have, again, our end game. What's the bottom line? What's our Medicare reimbursement that we either owe back to Medicare or they owe us? So what do we need from you as a clinic in order to arrive at the cost per visit in our end game calculation? Well, we need financial statements, of course, because we have to file these electronically. We have cost reporting software. We ask for provider and practitioner FTE data, visits by practitioner. We have wages and benefits. So we'll usually get breakouts from your financial statements on certain expenses like wages and benefits and other expenses. A depreciation schedule, your PSNR report. So that's a report from Medicare that summarizes your Medicare charges, payments, visits for the year. We need that. And then again, on the flu and pneumonia side, in order to claim our flu and pneumonia vaccinations and get paid on the Medicare cost report, we have to have injection totals and we have to have invoices in order to come up with the cost per injection. Some other items on the non-RHC side, we look at laboratory costs because we have to break those out differently. We have radiology costs or other diagnostic costs, advertising costs, and another component of rural health clinic, the rural health clinic cost report settlement, is our Medicare Bad Debt. So Medicare Bad Debt log. And then if there's anything else that's missing from your trial balance, like additional costs, other breakouts of expenses not related to the RHC, we would need some specific information about that. So your cost report preparer typically would get you a list of information in order to, get started on the cost report, and typically there's questions from there. Let's move on to allowable costs. So that's, overall general overview of the rural health clinic cost report. Let's talk about, again, our numerator number that we're trying to get to. And what we're trying to get to is allowable costs in our numerator. What constitutes allowable costs? Well, if you look in the Code of Federal Regulations, Medicare defines allowable costs as they must be reasonable and necessary. They include practitioner compensation, overhead, equipment, space, supplies, personnel, and other costs incident to the delivery of rural health clinic services. Something that I'm going to point out to you, let's say if you're a hospital that has provider-based clinics, the professional component is paid based on fee schedule, and therefore practitioner costs are not included in that calculation. What we're winning on right now, and there's been some changes in rural health clinic potential payments in 2021, but right now, practitioner costs are reimbursed and are part of the cost per visit, and 100% of that is paid. So this is kind of a difference. This is what we win on. As a provider-based rural health clinic, we get to claim our practitioner costs, which would include recruiting. We're getting paid a full cost per visit for our services that we provide in the rural health clinic. And what's our source document for these allowable costs? Well, we have departmental reports. We have our internal financial statements. This may be all other hospital cost report data. Your profit and loss statement. Oftentimes for our independent RHCs, we're getting a QuickBooks report with a P&L, and then we also have the detail of that information. By internally prepared financial statements, again, like your P&L, or by an outside accountant. Tax return information. These are some items that we may need as well. Keep in mind that allowable costs, they're not the same as tax deductions. We want to make sure that when we are preparing the cost report, we're using information that's an accrual basis, not a cash basis. So not expenses that were paid necessarily in the cost reporting year. It's expenses that relate to the cost reporting period. So let's say you're at 12/31 year end and you paid for salaries that related to December and January, we want to make sure that we claim those salaries in the cost reporting year. Depreciation may be different that we claim for tax purposes versus cost reporting purposes. We have some related party adjustments that we may make, and I'll talk about that in a little bit. Our provider owner compensation, we may be able to claim different amounts based on the type of rural health clinic we are. Are we a partnership? Are we a corporation, etc.? So you may see your cost report preparer make some adjustments to your cost report that are different than your tax information. We also have to separate our costs based on what type of healthcare provider the costs relate to. So we'll have salaries in our cost report information. We'll also have overhead costs, and then we'll have non-RHC costs like lab, radiology, hospital services, and other. And let's talk about this for a second. Our other costs, this is important, that we have a separate breakout. If we're a freestanding rural health clinic, these actually go on a separate line. If we're a provider-based RHC, this may go back to the hospital. And the reason being is because even though we're providing these services within the walls of the rural health clinic, how we bill for those services is different than under the cost per visit. So let's take lab, for example. Laboratory services, we have 6 basic lab tests that we have to have the ability to perform in a rural health clinic. But if we're a freestanding RHC, we actually bill for those under Part B and get paid under fee schedule, right? So those costs then need to make sure that we break those out separately and they're not part of our all-inclusive encounter rate calculation. Remember, that's where we're trying to get to. What's our all-inclusive encounter rate? What's our cost per visit? That's AIR. We need to make sure that these costs are not included in our numerator. The same goes with the technical component of diagnostic services. We never bill for those services under our rural health clinic provider number. We're either billing them under the hospital's number or we're billing them under our Part B provider number if we're a freestanding RHC. Hospital services, if we're covering the emergency room or we're doing inpatient and outpatient surgeries, those aren't rural health clinic services, so we want to make sure that salaries associated with those services are removed from the salaries that we may report within our general ledger. So general ledger costs can be different than what we report in the cost report in the end, and that's where our adjustments come into play. Again, we have to separate our costs, our compensation, other costs, salaries, benefits, right, on the cost report by practitioner type. And these are our rural health clinic recognized practitioners. So we have physicians, physician assistants, nurse practitioners, visiting nurse services if we're in a home health designated shortage area. We'll talk about that in a little bit too. And then we have other providers that are not, or we have support staff like nurses, not necessarily RHC providers, but they're part of our healthcare staff. And then 2 other recognized RHC providers by Medicare that we can bill and get paid for under the RHC cost per visit are clinical psychologists and licensed clinical social workers. So keep that in mind. Our physicians, PAs, nurse practitioners, clinical social workers, and clinical psychologists, those are really our RHC practitioners that we're getting paid an all-inclusive encounter rate. Again, we are reporting costs based on accrual basis versus cash basis. That's important. And your cost report preparer may not necessarily know if you are providing them a P&L and it's not evident that it's a cash basis. You'll want to communicate that with them. We also talked about depreciation. Depreciation, we may have accelerated depreciation methods for tax purposes, but for Medicare purposes, we want to make sure that we are using American Hospital Association useful lives, that we're expensing, maybe we have a depreciation policy where we expense items up to a $5,000, that we write those off in the year that they're purchased. So useful lives can differ between tax and cost reporting. We may have, again, a different write-off policy for our cost reports. So typically on the cost reports that I work on, most rural health clinics write off of $5,000. Related parties, we may also have related party adjustments through our cost report. And what we want to make sure, what we're trying to get to is, like we say here, to treat the costs incurred by the suppliers if they were incurred by the provider itself. So what we want to make sure of is, let's say we are renting space from the physician that owns the building, and he also owns the clinic operations, but he has a separate, LLC for his building. We want to make sure that we're not claiming the rental expense. We're actually claiming the costs incurred by the physician for, let's say, insurance, depreciation on the building, property tax, etc. Those actual costs that are incurred versus rental expense. What Medicare is making sure is that we're not inflating our rental expense and just to get our cost per visit up. So again, on that would be, some examples: building and equipment leases. Perhaps we have a management company that's a related party, and we lease employees from that management company. We want to make sure if it's not a pass-through expense, if it's an inflated expense, that we're actually just incurring the amount that was incurred by the management company. So you may see some adjustments on your cost report. So this is an example, again, a rural health clinic that pays for rent to a related party. In this case, that rent was $48,000. But when we look at the actual expenses that are incurred by the partnership that owns the building, and that rent is being paid for, the total annual costs, as you'll see here, are $35,000. We're then reducing those costs by $13,000. So think about, what possible related party transactions do you have, and are they being reported to your cost report preparer? Because your cost report preparer may not know, and they may have asked the question previously and there were no related party expenses, and things have changed, and now you need to make sure that you communicate that to your cost report preparer. So this is just that same example, and a page from the cost report where we have adjustments to costs, where again, we've claimed $48,000 on our Medicare cost report, but our actual costs incurred by the related party are $35,000. Therefore, there's going to be a reduction in expenses of $13,000. We have, again, our numerator where we're getting to allowable expenses, but part of those allowable expenses, maybe they include non-RHC costs that we need to reclassify, or some overhead needs to be allocated to non-RHC costs, and we need to make sure those are on the correct lines. These are the items that are specifically listed in the regulations as non-RHC expenses. Really our DME, hospital, lab, radiology, mammography, that's listed in the regulations. But there's some other items that are non-RHCs that sometimes aren't as evident, or clinics don't think about it, and that may be items like chronic care management. And I'll mention that because we have a lot of clinics that are providing chronic care management services, and they think that it's part of their rural health clinic benefit, and it is. We get to provide chronic care management services in a rural health clinic, and we actually bill for those services on the rural health clinic claim form, the UB04 claim form. But let's think about how those services are paid. They're paid at fee-for-service amounts. They're actually not face-to-face encounters with our providers. We get paid for every perhaps 20 minutes of service if it's a basic COCM service, but it's paid based on fee schedule. So anything that's paid outside the cost per visit, that's a non-RHC service, and we need to make sure that we're accounting for that properly. So think about, what services are you providing in your clinic that are paid under fee schedule for Medicare? That's a non-RHC service. We also, again, have hospital services. We provide those services, but they're not paid or billed under our rural health clinic number. We want to exclude those costs from our all-inclusive encounter rate. I mentioned lab services and the technical component of radiology services. Those are also not paid under our RHC cost per visit. Therefore, we have to treat those expenses differently. The other one that I'll mention are telehealth visits. So telehealth, Of course, during COVID, we're able to provide distance site telehealth services, but we're paid based on fee schedule. So doesn't have anything to do with our cost per visit. Therefore, we have to treat those expenses differently. So that's kind of where you want to be thinking is, if this was a Medicare patient, could I bill for these services and get paid under my all-inclusive encounter rate? If I can, yes, that's an RHC cost, but what other costs may be buried in my profit and loss statement that I'm handing over to my cost report preparer? They wouldn't have any idea that it's hidden in there, and those are actually non-RHC costs. So that's kind of what you want to be thinking about. We talked about lab services, and one thing I want to mention is, even though we, as a condition of participation in the rural health clinic program, we have these 6 basic lab tests that we have to have the ability to perform. But again, they're paid under either fee schedule or they're billed out under the hospital if we're a provider-based rural health clinic. So all of those costs either are removed from the cost report or put on a different line, or if we're a provider-based rural health clinic, they're actually reclassified over to the hospital, or should be. So what expenses do we need to be looking for? Again, what expenses may be in your trial balance or your profit and loss statement that are related to lab that may be buried and not separated out? And this is, for your thinking about, what could I be doing differently, or how could I set up my profit and loss statement differently, or my trial balance differently, in order to help my cost report preparer out. Perhaps they'll ask less questions if I set this up this way. If you have a cost center in your rural health clinic, it's fine to keep your lab expenses in there. But if you identify all your lab expenses in one area, or it's very evident, medical supplies, lab tech salaries, CLIA license, those types of expenses that are listed here, if they're buried in some other expense item and we're not sure where all of those lab expenses are, it's hard for us to go grab them, or maybe we have to look at your detailed trial balance. If you have something set up already, it makes it really easy for your cost report preparer. So some ideas for you there. Rhonda, I'm going to pause for 1 second, take a drink. Are there any questions so far?
Yes, there's one question.
Okay.
We have 3 clinics. 2 of them go through Noridian MAC, and 1 goes through Palmetto MAC.
Yep.
Can they all be filed on one cost report, or do they need to be separate reports?
Yeah, unfortunately, when there was the whole MAC change, everyone thought that those freestanding rural health clinics that were certified before for a certain period would be moved over to Noridian, and they never were. And unfortunately, that clinic that was certified under, which was probably Riverbend at the time, when it got switched over, it has to stay with Palmetto, and we can't combine them. The other thing to think about is on the other 2, it's possible to combine them. Typically, your first year cost report, they have to be separated. And let's say you add on a new rural health clinic, it's got to be separated for the first year. The years thereafter, if those clinics are under the same tax ID, then you can request a consolidated cost report. So unfortunately, there's nothing to be done on the Palmetto side versus Noridian, but you do have an opportunity on those other 2 clinics to possibly combine them into one rural health clinic cost report.
That's it.
Okay. All right. Well, keep questions coming if you have them, and I'll pause every so often. So on these non-RHC costs, again, maybe we're removing them through an A2 adjustment or an A8 adjustment. We'll talk about that, where these are on the cost report. So we have costs that we may be moving to a different line, or we have costs altogether that we have to just remove from the cost report. We take them off altogether, and some of those are listed here. For example, costs not related to RHC at all. We have part of the clinic that is a rural health clinic, and the other part of the building is not rural health clinic at all. Let's say you lease it out and you still have those expenses in your profit and loss statement. We need to remove those costs. Advertising in order to increase utilization of the clinic. is actually a non-allowable expense. So you may look at your cost report and see an adjustment for removal of advertising expenses. That's why it's non-allowable by Medicare. Purchase lab services. We remove costs related to that because they're billing for the lab services. We need to remove the costs. Interest income. Interest income, we have to offset that or remove interest expense up to the amount of interest income. Let's say we have other miscellaneous income amounts. So let's say we have medical records income. We will reduce our office supplies or expenses by our medical records income. So you'll see some adjustments on worksheet A8 that are related to non-allowable costs. And same thing, if some of these items you can separate on your profit and loss statement or trial balance, that's really helpful for your cost report prepare. Really quick on non-RHC and carve out and commingling arrangements. We can talk about this a little bit more on the advanced cost reporting topic, but you know, we can set aside non-RHC hours of operation. I do have some clients that do that, although sometimes it can be a billing nightmare. That's possible. We also have to make sure that we keep track of costs related to that. We also get a lot of questions, well, can we just do, you know, a procedure room in a rural health clinic and bill it? We do all of our Part B procedures in that space, and then we're able to get higher reimbursement under a fee schedule reimbursement if we do it that way. And, you know, years ago, there was some of that going on. I find that kind of a dangerous area to be in at the moment because there's so much speculation regarding provider-based, especially provider-based clinics. And of course, Medicare wants to make sure that you're not just picking and choosing on what services that you're billing to Part A versus Part B. So that's kind of this commingling arrangement. When you're a rural health clinic, you're a rural health clinic at all times. And you can, again, set aside non-RHC hours of operation. Past that, we get into a gray area and it gets a little risky. So I'll just mention that quickly. I have some information in here. I'm going to move to RHC visits and provider productivity. So we have our numerator where we have our allowable RHC cost amounts. So we went through the exercise of what's our starting trial balance amounts, and we have either reclassified expenses to other departments or lines on the Medicare cost report. We've removed some expenses because they're non-allowable. We have got our numerator down pat. We have allowable RHC costs. So we're getting close to coming up with our cost per visit. But the other big component of this is our denominator. And we've got rural health clinic visits in our denominator. And rural health clinic visits isn't as easy as we think it is because one, we have to make sure that we're calculating our rural health clinic visits correct. And we also have productivity standards to think about. So when we are talking about a visit, what we want to be thinking about is if all visits were Medicare patients. Now keep in mind, these are all costs. So these are all costs, not just Medicare costs. Medicare is arriving at an allowable cost per visit for all costs, all visits. We want to be thinking if every visit was a Medicare visit, could I bill it as an RHC encounter? And what we need to be thinking about that, is it medically necessary? So one, is it medically necessary that the provider perform the service? So if a provider is performing a allergy injection, but a nurse could be performing it, it's really not medically necessary for the provider to be performing that. Is it face-to-face? Is the patient in the clinic? Or is it a home visit where, you know, it's face-to-face? And is it with an RHC defined practitioner? We went through those defined practitioners. Again, our our physicians, our NPs, PAs, certified nurse midwives, our clinical psychologists, and clinical social workers. Those are really the three components when we're counting visits. We do not want to be counting non-RHC visits, so we don't want to be including hospital visits, nurse-only visits. We want to be counting those visits that either took place in the rural health clinic or outside of the rural health clinic. There's a couple exceptions where we can bill for RHC visits, and those are home visits, skilled nursing visits, and if we have swing bed visits, those are also rural health clinic visits. So that's really what we want to be counting when we're talking about rural health clinics visits and the information that's provided to your cost report preparer. This is a really critical component. What we find is oftentimes those people that are gathering the data don't know the ramifications of overstating visits, understating visits, etc. So oftentimes, someone in the clinic is getting visit information together and they're counting visits that are nurse-only visits or hospital visits, etc. Keep in mind, when we have higher visits, we have a lower cost per visit, right? If we go back to this calculation, the higher our denominator here, the lower our cost per visit. So that is the risk of overstating our visits. If we understate our visits, we have an incorrect cost per visit. It could be higher than what we should be getting. But we also have this methodology that Medicare put in place of productivity standards. And what Medicare has said is that for each physician FTE, they expect that 4,200 visits are going to be performed annually. And for each mid-level FTE, half that will be performed. And so when we get to the end and we look at actual visits versus productivity standard visits, that's what's going to be used in the calculation, the greater of the two. So in this example, this is like a worksheet straight from the Medicare cost report. We've got physician FTEs times our productivity standard visits equals our minimum visits. And we do that for each type of provider that we have in the rural health clinic. So this is looked at in aggregate. So in total, we have 4.3 FTEs and our productivity standard visits are 16,000. But our actual visits are 18,000. So assuming that these are correct, we're going to have a denominator of 18,200 in our cost per visit calculation. If our visits are overstated, let's say our staff that's counting visits, they count nurse visits and hospital visits, etc., our cost per visit is going to be incorrectly adjusted for visits that really shouldn't count. So in this case, here's our correct visit number, and the greater of the two, productivity standard visits or actual visits, is used in the denominator. So in this case, our productivity standard visits are going to be correct. So on the flip side of this, if our FTEs are higher than they should be, then our productivity standard visits are going to be higher than they should be. And then again, we have an incorrect cost per visit being calculated, and it's reduced from what it should be. Now, we oftentimes see this. I want to say we typically see a productivity standard problem in rural health clinics. It's not unusual to see them. But we want to think about what the effect is of, if we have something incorrect in our calculation. For freestanding rural health clinics, we have a cost per visit limit. So it doesn't matter how high our cost per visit is. It's about $88 right now. We're over our cost per visit. So in this case, it doesn't matter for a freestanding RHC. Even if we incorrectly counted visits, we're still greater than the cost per visit limit. Do we really need to look into this further? Not really. But if we were a provider-based rural health clinic with less than 50 beds and we're not subject to a cap, then we're reducing our cost per visit by $10. In this case, the clinic would have full cost-based reimbursement. And, this is $10 per visit times our Medicare utilization. This could be a lot. In addition, if we're using information for a Medicaid rate, let's say you were a border town in Washington State and or in Oregon, and you wanted to participate in the Washington State Rural Health Clinic program, they actually use productivity standards in their rate calculations as well. Then you would be subject to productivity standards as well. The state of Oregon, good news for you, does not utilize productivity standard visits in the calculation. It's actual visits. So if you overstated actual visits when calculating your initial rate, your cost per visit would be lower than it should be. So this is a really important component of the cost report. And when we talk about provider staffing, again, that FTE component is really important. We have FTEs that are reported for each type of provider. If we go back and look at this example, notice that productivity standards only apply to our physicians, PAs, nurse practitioners, and certified nurse midwives. That's where we would put them in the nurse practitioner column. But note that they don't apply for our clinical psychologists and our clinical social workers. So that's interesting. In the end, they're looked at in aggregate. So we could have a nurse practitioner really making up for a physician shortfall, and that happens a lot of times. When we're reporting FTE information, or let's say you're getting again data from the clinic on your providers and getting FTE information, we don't just want to look at payroll reports. We want to look at how much time are those providers actually able to see patients. And note that this does include charting time. So we want to include time spent within the clinic. If they're performing nursing home visits, we want to include that time. If we have swing bed patients, we want to be including that time too. But just like we looked at billing for lab and radiology, where those are paid under fee schedule, we want to be looking at FTEs the same way. When we don't bill for items under the RHC cost per visit, we want to make sure that we're excluding the time related to those non-RHC services, like hospital time. You may have, again, providers that are performing ER rounds, or they're doing hospital surgeries. We want to exclude that time in our FTE. We want to exclude administrative time or committee time or medical directorship. The lower we can justify our FTEs, the better off we're going to be, because we're not going to have a productivity standard problem, or we may have a less of a productivity standard problem if we do that. One other thing I forgot to mention, and Ron Deanne, we kind of need to have a presentation on the changes to the RHC payment rates, but on April 1st, already existing freestanding rural health clinics, they're going to go up to a rate of $100 per visit. So if our cost per visit is lower now than $100, we're going to be subject, productivity standards are going to be a lot more important for freestanding rural health clinics than they were before. So note that. And that's almost a different discussion, but there's some changes in the COVID relief bill that got signed at the end of the year that's going to have some significant effects on rural health clinic reimbursement. Going back to provider staffing, oftentimes what we'll receive from clinics is, okay, we have, 3 physicians and they're all 1 FTE. Okay, but when we put in 3 FTEs, we have a huge productivity standard problem, and then we find out, well, really, 1 FTE isn't based on 40 hours work week, and much of that time, or part of that time, is not related to actually providing patient care services for rural health clinic type services. They have administrative time, they have hospital services, there may be a medical director, so we want to make sure that we separate those out. Or they were only there for part of the year. These are the types of things that we need to make sure that we're considering when we're giving that information to our cost report preparer. Ron Deanne, any more questions so far?
Nope, not at this time.
Okay, we're cruising. 15 minutes, we got a lot to cover still. Okay, Medicare flu pneumonia. So we get to our cost per visit. That's one component of the cost report. Another component of your receivable. So maybe you owe based on, maybe Medicare owes you, or you owe Medicare for what you were paid during the year for Medicare services versus what you should have been paid. That's component one. Component two, we have Medicare flu and pneumonia reimbursement. Medicare flu and pneumonia reimbursement is reimbursed based on the cost per injection, and this is for direct Medicare patients only. And in order to come up with a cost per injection, we have to have certain information from you, like invoices, staff time to perform the services, but we also have to have a log of the patients that receive the service. So we have to have their Medicare number, name of patient, Medicare number, and date of service. So that's important. We have to include a log with the Medicare cost report. One thing to notice is that we get paid for the Pneumo 13 and 23 on the Medicare cost report. And again, what we're arriving at is a cost per injection. So this is a worksheet from the Medicare cost report where really our end game on here is coming up with a cost per injection for flu and pneumonia. And that then is applied to our Medicare injections that were performed during the year. And that's what we're going to get paid at the end of the year. So if we look on here on line 12, this is really our end game. And what this includes is cost of the vaccination, administration costs like staffing costs, and we also get overhead allocated to these services as well. That then gets us to this cost per injection. We'll notice that in this case, we had 0 pneumonia Medicare injections, but we had 169 flu injections for direct Medicare beneficiaries. And so in this case, we're getting reimbursed for our injections on the Medicare cost report for Medicare beneficiaries. So this is a really important component and can make up a large part of your receivable, especially for those Prevnar injections. They're expensive, and we want to make sure that we're claiming those. So we have component 2 of the cost report. Component 3 is our Medicare bad debt. So one of the benefits of the Medicare program is we get to claim Medicare bad debt on our cost report, and we get paid 65 cents on the dollar for unreimbursed deductibles and coinsurance. We have to make sure that this bad debt is only related to covered services for RHC services. So this isn't going to include amounts that were billed to Part B. This is only for our Part A rural health clinic services. And we have to make sure that we've met certain requirements as a rural health clinic in order to claim these amounts on our Medicare cost report. And some of those components, one, we have to make sure that we've made a reasonable and consistent collection effort to recoup these amounts from the patient. So Medicare deems that as 120 days from the date of the initial bill is a reasonable collection effort. We also have to make sure, and this is key right here, that if these amounts have been turned over to a collection agency, that we still have the opportunity to collect on them, and therefore we cannot claim them on our Medicare cost report. So that's an important component of this as well. So let's say we kind of have 3 components of Medicare bad debt. We have the type where we've made a reasonable collection effort for 120 days. We have deductibles and coinsurance amounts that are unpaid. We can include those on our cost report. The second type is if we have Medicare, Medicaid crossovers, we have a denial from Medicaid that they're not going to pay anymore, then we can also claim those on our cost report, and we can claim those immediately as long as we have a denial. And the third type is if we have a documented charity care policy, which is not required as a rural health clinic, it is as a federally qualified health center, but not a rural health clinic. We have a documented charity care policy, and it applies to all patients, and that patient meets our charity care policy and it's documented in the patient's file, then we can write those amounts off immediately as well and claim them on our cost report. Keep in mind, and this is an opportunity, let's say you're not, you haven't kept track of bad debt. Bad debt is claimed in the year that you write it off. So if you have amounts that you have not written off and they could be, claimed as Medicare bad debt, we can still claim them on the Medicare cost report. So it's not a lost amount. If you haven't claimed them before and they're still on your books, we can write those off and claim them. So just kind of strategy there. There's some documentation that has to be included with the cost report that's here. And there's actually a form, a prescribed form that Medicare requires. If you have questions or need that form, I can sure get that to you as well. Let's talk some helpful hints. Regarding cost reporting, we want to make sure that we collect as much data as possible on an ongoing basis. I talked about making sure our trial balance is separated, making sure we have very detailed information. We're tracking FTEs during the year. We're setting up, again, accounting procedures in order to track expenses. That'll make it easy to break out. Related party expenses, we have that ready to go at the end of the year. Consistency counting FTEs or visits. Again, do those individuals that provide that information understand how that affects your cost report and your payments? If you're gathering that data, then we want to make sure that it's checked. Is there a productivity standard problem, and could it be reduced because maybe we've reported FTEs too high? Some components of the cost report that might be helpful for you to look at. We have different worksheets depending on whether we're a independent or freestanding rural health clinic versus a provider base, and there's some key information. So you can look at your cost report and see where we came up with allowable expenses and where expenses were reclassified to, like lab or radiology or telehealth expenses. And if we had adjustments, what adjustments were made. These are the cost report worksheets that have that information. Some other important components, if we want to look at your flu and pneumonia costs and Medicare reimbursement for the year, that would be on these worksheets, B-1 and M-4, if we're independent or provider-based, respectively. We also have our cost per visit. So really our end game is either worksheet C or M-3, and that'll get us to our final settlement. And what parts were that settlement? Well, of course, our cost per visit. We can look at our cost per visit on these worksheets. What amount of Medicare bad debt did we claim during that year? And we get, again, to our settlement amount. So that's these are important worksheets to look at. Another helpful hint that I'm going to mention is we want to make sure that we keep up with access on our PSNR report. So this is that report from Medicare that calculates or reports Medicare visits, deductibles, and coinsurance and Medicare payments. That's important for the cost report. And if we don't have access to that, it's hard to get it. It takes a while. So if we're waiting until last minute to get our PSNR report access, then we oftentimes have to file it without the PSNR data. So we make sure that your payments aren't cut off. So that's an important component, that you have access to that and you keep up access in order so that it can be gained for completing the cost report. Support for your injections, like your logs, your bad debts, again, your working trial balance, adjustments. Supporting documentation is really important, and again, keeping up on that from year to year. And of course, doing your own due diligence of reviewing the cost report for reasonableness, taking a look at it, getting familiar with your cost report. How many of you, before you actually sign your cost report, have a good understanding of what goes into it and what your settlement makes up, is up of? We're going to go through some benchmarking items during our next cost reporting call, so you can kind of look at, okay, what's reasonable for my clinic versus, what do I have on my clinic as a cost per visit, and where do I sit in relation to other clinics in the state of Oregon versus nationally. So those are some important things to look at as well, and we have some tools that we can help you with that way. Quickly, I'm going to take a sip of water, and then we have 5 minutes, and I'm going to go quickly over some COVID-19 considerations. Ron, Deanne, any other questions right now?
Yes.
Okay.
So, will we now need to include the new COVID injection information for the cost report?
Yep, we'll talk about that in a second.
Okay, and then this is real similar. Will COVID vaccine be reimbursed?
Yep.
Count it as a visit if a patient only comes in to get a vaccine?
Good questions. Okay. Anything else?
So yeah, there's a few more. Do you want me to ask you right now?
Yeah, go ahead.
Okay. How important is it that the RHC manager has a good understanding of the data that must be gathered and reported on the cost report?
Well, if they're the ones that are gathering it, I think it's important that they have a good understanding for sure.
Let's see, how often should a clinic request the PSR report?
Well, typically it's a 1-year request unless you're using it for some other, item as far as an interim cost report or some other, you're doing an analysis on something else. Usually you report it, you run it once a year for the cost report, but you need to make sure that you keep up on your access. That's the biggest thing, that your access you have is throughout the year.
Well, where do they get the report?
It is EIDM, and I can provide some information if someone wants to send me a question or send it to you, Rondianne. I can get information on how they can access the PSNR and how they can keep their access during the year. Or let's say you have a change in the clinic and you don't have access and someone else did previously.
Okay, let's see. I love it when people talk about the importance of adequate cost data and cost finding. 42 CFR 413.24 PRM-I Chapter 23. And that's it.
Okay, so quickly, we have 3 minutes, right? Let's talk about right now, because we got questions about vaccine administrations, and I don't have this in the slides because this is fluid and changing every day. Let's talk about vaccine administrations really quickly. This is a difference from flu and pneumonia vaccinations. So in your rural health clinic, if you are performing vaccine administrations on the Medicare side, you are going to claim these on your cost report, just like you are flu and pneumonia. So the COVID vaccination administration, you're going to get paid through your Medicare cost report. If you are a provider-based hospital, and let's say you have hospital staff that are performing the administrations as well as rural health clinic staff, what we want to make sure of is, or any hospital, we want to make sure that the staff cost for those administrations are in the rural health clinic. And the reason why I recommend doing this out of the rural health clinic is because we don't have to bill for them. We can claim them on the cost report at the end of the year, and then we're not chasing them, right? If we do it out of the hospital and we bill out of the hospital, we can do roster billing, but we're still chasing the billing. So I do recommend doing it out of the rural health clinic with rural health clinic staff, or being able to put the staff in the RHC and their time in the RHC for the time that they're doing the administrations, and then we can claim them on the cost report. The big difference here, and note this is for Medicare and Medicare Advantage, which is different than flu and pneumonia. Flu and pneumonia is for just direct Medicare. So your Medicare and your Medicare Advantage vaccinations will be reimbursed on your Medicare cost report. Okay, quickly, I don't know if we're going to get through all this, but these will be on the slides, and we can also talk about these on our advanced next cost reporting session. Telehealth virtual visits, really important because of COVID. We want to make sure, because these are paid under fee schedule, that we are tracking the costs related to these services. So staff time, your providers that are performing the services, we need to make sure that we have the costs broken out separately for that, and maybe we do a time study. So I just want to mention that really quick. Also, in the COVID-19 waivers, we're able to perform visiting nurse services. So those visiting nurse services to the homebound that we would normally have to have a home health shortage area designation, we can actually bill for those and get paid under the cost per visit. If we're providing those under that public health emergency blanket waiver, we need to make sure that we're reporting those visits as well. We also have the ability to request an FTE exception, and we always are, but what we're finding is we're getting a lot of these approved due to COVID. And so that is something that you really want to address. If you have a productivity standard problem, that affects your cost per visit. So freestanding rural health clinics, this really isn't a concern for you. Provider-based rural health clinics, that is a concern. And you're welcome to reach out to me. This is an important one. So I have some information regarding that in here, and we'll dive into this deeper on our advanced cost reporting session next. So with that, my contact information is right here. You're welcome to call, to email me. I know that's a ton of information in a short amount of time. I don't know if there's any other questions, Randian, that have come in.
No, there aren't any other questions. And as a reminder, will everyone please make sure that they complete the survey? So, Katie Jo, thank you for that wonderful presentation. You always provide so much good information. Thank you, thank you.
Thank you.
As a reminder to everyone, Katie Jo will be back with us next Wednesday, February 10th at noon for advanced RHC cost reporting.
Don't miss it.
So if there are no other questions, which I'm not seeing any, thank you, everyone. Have a good afternoon. Please complete the survey, and we will see you next week.